Hello, friend. Hello, everyone. This is Priyanka here. I hope everyone is doing well. Dear friends, in our previous classes that we have solved problems like fifth, sixth, seventh problems. Now let's we solve problem number 8 from Techniques of Financial Statement Analysis from Unit 3. Okay, so everyone, please see the question number or problem number 8. Here in problem number 8, I'm taking from Pankaj Publications Cost Control Management Accounting. Here, please see the question. From the following information, prepare comparative balance sheet and comment. Okay, so he given equity, reserves, bills payables, creditors, debentures. Okay, bills receivable, cash, debtors, stock, prepaid expenses, land and building, machinery and plant, bank, goodwill. So we have to prepare comparative balance sheet for this eighth problem. How you are going to prepare a balance sheet for this eighth problem? Let's be see. As you know that you know we will pro forma first. How we will draw pro forma format of this comparative balance sheet is the particulars. LY. LY means the last year. Here, he not mentioned in this problem any years, just rupees he have mentioned. So we have to take the first column as a last year, okay, and the second column as a current year, okay. That's what I mentioned here. Last year, LY means the last year and current year, and this is the abnormal change and percentage change. Here, first, as you know, we will take equity and liabilities, shareholders, funds, share capital. First one is equity, reserve, and second entry will come non-current liabilities. In non-current liabilities, what will come? Debentures and long-term loans will come in non-current liabilities, and current liabilities. And current liabilities, we will get creditors, outstanding expenses, short-term loans, bills payable. So, dear friends, remember these points. First one, in any comparative balance sheet, if you are preparing, first what will come? Equity, liabilities, shareholders funds. Okay, and after that you will get non-current liabilities and current liabilities, and total we will do. And after that, assets, liabilities completed, right? Then coming to assets. In assets, non-current assets, fixed assets, okay, and current liabilities. Here fixed assets and current liabilities and total. First we will take all amounts exactly entries. We have to be very careful while entering all the entries. What is going to be come in liabilities and what is going to be come in assets, we have to see properly while doing this entries in book. Now, see the problem. First, equity and liability shareholders funds I have taken here. Equity. Equity, how much last year? 1,50,000, and in current 1,50,000. So 1,50,000 minus 1,50,000, nothing, nil, right? So abnormal changes, nothing is here. And the percentage change, obviously, if we have abnormal change, then we will use the formula and we will get the percentage. Here no abnormal change, so there is no percentage change also. And reserves, reserves last year is 40,500, okay. Reserves, how much more? Reserves here 4,500. 4,500 reserves. 4,500, and last year 5050. What are the changes here? Abnormal change here 100, right? 100. As you know already, I have said what are the formula for this? Abnormal change divided by last year into 100. We will use this formula. Abnormal change is what? 100. And last year how amount is how much? 4500 into 100. If you do, you will get the percentage change value. And coming to non-current liabilities, in non-current liabilities, debentures is 4000. Okay, debentures, how much we have taken? Debentures is 4000. And here there is no current year debentures. There is no current year debentures. So we have taken same like that only. Here abnormal change also we have taken 4000 and 100. Now long term loans. In long term loans, how much is there? 4000, 42,000 and 31,000 in current year. So what is the change here? Abnormal change 11,000, 42,000 and 31,000. If you deduct every time we have to deduct this amount from current year. Okay, last year amount we have to deduct from current year, then you will get abnormal change. So we got minus 11,000. Okay, so if you do abnormal change divided by 42,000, you will get minus 26.19. Now see the current liabilities. In current liabilities, creditors 7,422 and current year 6,322. So if you deduct from 6,322 this 7,422, how much you got? Minus 1100. Okay, and if you do abnormal change divided by last year, means minus 11,000 divided by 7,422, then you will get a minus 14.82 value. Now see the outstanding expenses. Outstanding expenses in last year there is no outstanding expenses, but in current year it's 6,000. Okay, 6,000. Now short term loans. If you see the short term loans, 11,000 is the short term loans, and current year 15,000 short term loans. So 15,000 minus 11,000, 4,000 you got. Again 4,000 divided by 11,000 into 100, you will get percentage 36.36%. Now see friends, bills payable. Bills payable, how much you got? 6,000 bills payable, and current year 6,667. Now, if you deduct from 667 6,000, you will get 667 in abnormal change. Again, 667 divided by 6,000 into 100, you will get 11.7. So, total, if you do all liabilities side, equity and liabilities, non current liabilities, current liabilities, all together, you got 2,24,472. How much you got, friends? 2,24,002. Now if you do the current year also, current year how much? Current year is 1,50,000 plus 5,050 plus 31,000 plus 6,322 plus 6,000 plus 15,000 plus 6,667. You will get the total together 2,20,039. If you deduct this amount from this amount, current year amount, okay, last year amount we are deducting with current year amount, you will get minus 4,433. If you do abnormal change formula, abnormal change by last year is equal to 1.97. Okay, completed liability sides. Now assets side. Non-current assets, fixed assets, land and building, furniture, machinery, plant, goodwill. Okay, we taken all the fixed assets. Again, here what we taken here? 1 lakh last year, 1 lakh 10,000 the current year. Abnormal change how much? 10,000. 10,000 divided by 1 lakh, how much you got into 100? How much you got? 10.10%. Furniture last year is 30,000, current year is 20,000, minus 10,000 you got. Minus 10,000 divided by 30,000 into 100, 33.33%. Machinery and plant 30,000 and 31,200. What is abnormal change? 1,200. 1,200 divided by 30,000 into 100. If you do 4.0. Now goodwill. See goodwill 12,091. Okay. And how much in current year? It is a 78. So minus 12. What is this? 12,013. If you deduct from 78 this value, how much you are getting? Minus 12,000 uh, 13. Now 12,013 divided by 12,091 into 100. If you do 99.35. Okay. And current assets, bills receivable, cash, debtors, stock, prepaid expenses, bank. Please take have a note, whatever the problems I'm telling, please try to copy this problem, friends. So in current assets, what we did: bills receivable, cash, debtor, stock, prepaid expenses, bank. So amounts, last year given amounts are this one, and the current year is this. So we have deduct from current year this last year amounts. We will get this all values. From with these values, we did abnormal change percentage. How abnormal change divided by last year into 100. If you do, we will get these all values. So total altogether, how much in assets, fixed assets plus current assets, how much you got? 2,24,472 and 2,20,039. Again, what is the change here? Minus 4,483 abnormal change. Again, abnormal change divided by last year into 100. Minus 4,483 divided by 2,24,472 into 100. If you do, minus 1.97. Okay. So I hope everyone got. You have to give the interpretation also. So profitability here satisfactory, but the liquidity in the cause of concern in the short term overall position is the satisfactory. So eighth problem we have completed. Dear friends, please share this problem with your friends, like and please subscribe my channel, friends. As much you people subscribe and like, I will try to upload the videos by your encouragement. Thank you so much. Wish you all the best.